Is hyperinflation coming to the US soon? So let's talk about hyperinflation, since Twitter and Square CEO Jack Dorsey put out some controversial tweets over the weekend, and it's being talked about widely in the mainstream financial media. It is a lot more complicated than a lot of people are making it out to be. The Austrian School of Economics, since the 2008 financial crisis and QE, was predicting hyperinflation prematurely. Peter Schiff and others were predicting hyperinflation prematurely. For years now, I've been in the stagflate, tax and lie camp. Stagflation, if it is really bad for many, many years, so if you have double-digit stagflation, which we're having now with tax increases, it feels really, really bad, almost like hyperinflation, but it's actually not hyperinflation. The conventional definition of hyperinflation that many economists use is 50% or more inflation rate per month. We are nowhere near that. So in terms of an annual inflation rate, we're in the teens right now here in the US. In other countries, it's probably higher, but we are nowhere near Venezuela or Zimbabwe or Iran type of currency devaluation rates. And actually, the way the global financial system is set up right now on a dollar standard system, with how much dollar denominated debt keeps getting borrowed, it is very difficult for the world reserve currency to have a hyperinflation. In fact, the world reserve currency has never had a hyperinflation. So in the past, in past financial history with empires, there has been currency collapses, but in modern history, there has not been a hyperinflation with the world reserve currency. The British Empire did not have a hyperinflation. They had really bad stagflation. They had 5 or 6 different currency devaluations of the British pound in, I think, 30 or 40 years. I covered this in past videos in my archives of the YouTube channel over the last 4 or 5 years. So there has been a lot of currency devaluations, and that may be the path that we're headed down. If you go and do a lot of research with financial history, and one of the best financial historians is Adam Ferguson. He wrote the book When Money Dies about the Weimar Republic hyperinflation in Germany, but he also studied other past hyperinflations. And he is on the record as saying that the US will probably not have a hyperinflation, that there will only be really, really bad stagflation. And that is because of how the global economy is set up, the world reserve currency, and also the US has to import a lot of goods. So the US, with the dollar standard, with how much dollar denominated debt, velocity of money here in the US, which measures lending and spending, velocity of money is collapsing, but a lot of this stagflation and shrinkflation is actually coming in from the US importing so many different goods. And all these other countries are doing very similar policies to what the US is doing. They're monetizing debt. These central banks are expanding their balance sheet. The size of government in these other countries is not being drastically cut. In fact, in many cases, it's expanding. So you have the central bank subsidizing big government, subsidizing welfare programs, subsidizing government spending, subsidizing bailouts to corporations. That's what you have right now. So a lot of this is stagflationary, stagflate, tax, lie. If velocity of money does pick up here in the US, which is lending and spending, velocity of money is actually a very poor measurement, in my opinion. I don't think it really measures that much anymore because it has not accurately shown that stagflation was coming, and anyone with any common sense, any halfway decent analysis could have told you 18 to 24 months ago that we're going to have bad stagflation, that we're going to have supply chain problems, that other governments and central banks were going to do similar things. In 2020, we had the Indian central bank prop up the dollar. When the dollar index got weak last year, as predicted, you had all these foreign governments and foreign corporations in China and emerging markets start to borrow even more dollar-denominated debt. This has happened in countless cycles throughout the past. If you're not familiar with my thesis on that, besides stagflate, tax, lie, go and look up my videos in the archives about the dollar tug of war. So the dollar tug of war also prevents hyperinflation because there's demand for dollars. So all these factors here are preventing hyperinflation, at least for now. So in the short term, so for at least the next 6, 12 months, the odds of hyperinflation, I would say, are very, very, very low. One of the main signs that we would see hyperinflation in the US would be velocity money starting to pick up, so lending and spending measured in the banking system. But if you talk to bankers, they're really not giving out a lot of loans to small businesses and others. They're not doing a lot of lending because the banks now here in the US, especially the large banks, are hedge funds. They make way more profits using reserves as collateral in the system and going and gambling with it on other asset prices, on leverage bets, on derivatives, on bond trades, on currency trades, on commodities, whatever else they can manipulate or leverage up on trades. So saying that there's going to be hyperinflation in the short term here in the US, it is more likely that an emerging market will have a hyperinflation or a currency crisis rather than the US. And again, in terms of modern financial history, with the current financial system we are on, the global world reserve currency has not had a hyperinflation before. So past empires in recent memory, like the British Empire and others, they did not have a hyperinflation. They had bouts of deflation, and then there was currency devaluations. They had credit crises. They had similar problems to what the US is having now. The British Empire had problems after World War I and during World War II, and there was currency devaluations. There was very large currency devaluations, and then the British Empire, all their power, their welfare and warfare state, their military-industrial complex, it drastically shrank. But they did not have a hyperinflation. Finally, if you like content like this and want to help keep content like this free so it doesn't all end up behind a paywall, or you want far more in-depth content, research, financial education, and analysis than I'm providing these short little free videos, there are now over 180 articles, charts, and audio podcasts behind the paywall, exclusive for patrons, all for the cost of a Starbucks cup of coffee per month, only $5 a month. I think it is one of the best deals out there. And just in the last 18 or so weeks, there are 30 or so new articles out on a lot of interesting topics about global macro companies and sectors. Hopefully, if I'm feeling okay, I will get an update out on the uranium market. I know I've been promising one for the last couple weeks. I honestly have not been feeling well. This is the new normal I have in my life where my health problems don't get any better as long as I have to work a lot. So if I could wrap up this short little video very quickly, Jack Dorsey, who is very controversial, he's the CEO of Twitter and Square, when his company is not censoring a lot of libertarians and Austrian school economics people and pro-Trump people and Republicans and people who are pro-capitalism. Apparently in the last couple months, he is now starting to read libertarian books. He put out a link in the last couple months on his Twitter to a Murray Rothbard book. I put the article headline there on your screen, Anatomy of the State, which is not a beginner's book. Surprised that Jack Dorsey read that, although a lot of Marxists and socialists, basically a lot of Jack Dorsey's friends in Silicon Valley that are rich and hypocrites and champion socialists, were telling him that he should not promote and endorse any Austrian school or libertarian works, that it's better if he reads Karl Marx. I was reading under his Twitter, all the tweets under there was pretty hilarious. But he thinks that hyperinflation is coming to the US. In modern times, the world reserve currency has not hyperinflated. The British Empire, over the course of about 40 years, the British Empire, which was the last modern world's reserve currency before the US, they did about 5 or 6 different currency devaluations. They did not have a hyperinflation. So you would have to go through past financial history where it was not a world reserve currency setup for currency collapses. So the odds of a world reserve currency having a hyperinflation is very, very low. The definition of a hyperinflation is actually a 50% or more inflation rate per month. Again, we are nowhere near that right now in terms of a real inflation rate. We have double-digit inflation, probably in the teens. That's an annual inflation rate. Plus you have shrinkflation. Plus you have a lot of taxes that are being layered on. So either existing taxes are being increased or new taxes are being layered on by all different levels of government here in the United States at the federal, state, and local levels. So it feels really, really bad. It feels almost like a hyperinflation because of all the currency devaluation, asset prices going like that, people's standard of living being drastically hurt, their everyday expenses are going up with stagflation and shrinkflation and higher taxes. It feels kind of like a hyperinflation, but it's not really a hyperinflation. Hyperinflation is much, much worse. But if you do have a stagflation, say double-digit inflation, say an inflation rate of 15 to 20% per year It's going to cut your standard of living in half very, very quickly. In finance, we have something called the rule of 72. So if there's an inflation rate of 15% in under 5 years, it will cut your standard of living in half. So with the rule of 72, if there's a 15% inflation rate, you divide 72 divided by 15, and in under 5 years, people's standard of livings would be cut in half. And it will be very, very difficult to beat stagflate, tax lie. You have to figure out how to grow your income. You have to figure out how to protect yourself from inflation and taxes. It's not just inflation, it's also taxes, although inflation is a stealth tax. But the bottom line here is that all these governments, it's not just the US, it's emerging markets, it's developed countries, are all doing very similar policies, similar to the 1920s and 30s, a beggar thy neighbor and stagflate, tax lie. But the US is feeling a large brunt of this because of how much the US has to import in terms of goods and services. And now you have these supply chain problems too, plus taxes are going up. So you have double-digit stagflation, shrinkflation, plus big tax hikes here for Americans.